Andy Scheckman told me yesterday that there's 2 billion ounces of paper silver traded every day. So for us to get that mint up and running and to pull that metal off the market, that metal's not going to the banks anymore. So they don't have that leverage against our metal, which is a great place to be. So you do the math. If we in 2024 we had 5% of our production go through the mint. In Q1 we had 7% of our production go through the mint. Our goal is to get 10% of our production through the mint by the end of 2025. If we can get that even greater than that and get it, I'd like to get 100% of our production through the mint. And that takes a lot of metal. You can do the math. It's billions of ounces of paper trading that could potentially be removed out of the marketplace because the banks all of a sudden wouldn't have that metal that they're expecting to hedge from.
There is a considerable discrepancy between the amount of paper silver, contracts or claims on silver, traded daily, around 2 billion ounces, and the actual annual silver production, which is only 830 million ounces. By increasing the amount of real physical silver going through their mint, which was 5% of production in 2024 and 7% in Q1 2025, aiming for 10% or more by the end of 2025, they're effectively pulling metal out of the system. This limits the bank's ability to use that silver for leverage in trading, weakening their control and influence over silver prices. Keith Neumeyer is a seasoned Canadian entrepreneur and executive, best known as the founder, president, and CEO of First Majestic Silver Corporation. He explains that the mining and smelting industry is highly secretive, especially when it comes to silver. Much of the silver produced in the West, like from Peru, Argentina, Mexico, Canada, and the U.S., is in the form of concentrates, which are then shipped to Asia for smelting due to a lack of capacity in North America. Once in Asia, the process becomes opaque. There's little reporting, and the refined metal is typically retained for domestic industrial use, making it challenging to track supply and demand accurately. In contrast, silver dory bars, 90 to 95% pure silver produced by mining companies, are easier to refine. These are processed in North American refineries at low cost and then sold, often into the banking system. Some companies retain part of their output for minting coins, for example, in Las Vegas. But most of the refined silver ends up in commercial bars for banks. However, concentrates still dominate the global flow, and since they're smelted overseas, most of that silver effectively disappears from Western tracking systems. The company has seen strong growth marked by its largest acquisition to date, a $970 million silver mine in Chihuahua, Mexico, which significantly boosted both cash flow and production. In 2024, they produced about 21 million ounces of silver equivalent. In 2025, that's expected to jump to 31 million, with 55% being silver, 35% gold, and the rest being lead and zinc. They faced setbacks with the 2021 Jarrett Canyon acquisition, ultimately shutting down the mine due to high costs and poor returns. While markets criticized the decision, the CEO emphasized their strong position as one of North America's largest silver producers and remains confident in the company's future. As we get into the video, remember to subscribe and touch the bell symbol to never miss an update. We value your feedback, so please leave a comment and give us a thumbs up if you liked the article.
It's a very secretive industry, and the smelters don't tell you their inputs, and a lot of the metal that miners produce is in the form of concentrates. So, and then there's no smelting capacity in North America. So all this concentrate from the West, like Peru, Argentina, Mexico, even North America, like Canada and the United States, there's no capacity to refine that or to smelt out that concentrate. So all goes to Asia. And then once it gets into Asia, it's hidden. There's no reporting. No one knows how much metal they've got, what they're holding. They don't export the metal. They keep it themselves. They use it for their own industries. And it's this kind of mysterious kind of number that just is out there. And so, the mining sector tries to, estimate, supply demand, but it's almost impossible to do that. We know from our perspective as a mining company, there's no resistance for our product. It's a world market, and then, we don't have a workforce, we don't have a sales force. It's a 5-minute phone call, and our metal's gone. Where it goes, well, that's your guess as good as mine. Okay, so they don't get smelted. So that's what's different. Okay, so those are doré bars. So mining companies produce either a doré bar, which is a block of metal, could be gold, could be silver. In our case, it's silver doré bars. So that they'd be 90 to 95% silver, and then there's a whole bunch of other metals, and the gold would be in there, maybe some coppers and lead and zinc would be in that bar as well. But that bar gets sent into the United States, and there's lots of refineries. Lots of refineries. And those refineries then spit out 1,000-ounce commercial bars. And then the banks, those commercial bars then get sold into the banks primarily. Our bars, fortunately, some of those bars get sent to Las Vegas, our mint. So we keep those in-house. But, a majority of our silver actually just goes into the banking system. But concentrates is a completely different world. So there's a group of refineries that exist, in the U.S. and Canada, and there's lots of them out there. There's a big competition, and it costs us almost nothing to refine a doré bar into a pure ounce of silver, because it's a very competitive industry, which is great for us. And but smelters, that's a different world. There's very few smelters around. They're all at capacity, and all the smelting capacity is really in Asia. So Japan, Korea, China, and that's where it all goes. Or majority of our North American production, or South American and North American production, all goes to Asia. Well, the company's growing, obviously, which is nice to see. And it seems like every 3 years we do an acquisition, and lo and behold, we pulled off another major acquisition in January of this year. Largest transaction in the company's history, $970 million we paid for the Los Gatos silver mine in Chihuahua State, Mexico. And it's really added ton of cash flow to the business, and a lot of production, of course, as well. Last year, 2024, we will have produced approximately 21 million ounces of silver equivalent, and this year will be about 31 million ounces of silver equivalent. So it's a pretty big increase year over year. 55% of that is silver, which puts us in a pretty unique position, in the global markets, in the silver space. And 35% of that is gold, and the rest is in the form of lead and zinc. So, we're very all in when it comes to silver. Yeah, I think we got penalized by the markets for the Jerritt Canyon acquisition that we did back in 2021. We ended up shutting that mine down because we just, I was quite honestly just didn't want to keep losing money. That mine, in hindsight, would have, we should have shut it down on day one. And then reinvested and improved it, because we knew improvements were required. But, at $1,600 gold and all-in sustaining costs of $2,400 an ounce, we were just burning too much cash. And it was the right decision to close it down. It will get reopened, and we have a plan in place. We're not talking a lot about it right now because we just want, we don't want to restart it just for a year and then have to shut it down again. Who knows? I'm the CEO, right? So, of course, I'm going to have my own biases, but I think the market did treat us unfairly as a result of that decision. I think it was a good decision to do. The stock was down a lot the day we announced that closure, and it never really recovered much. It just kind of went sideways for, almost 2 years. And then with the Gatos acquisition, we're now proving to the market that, hey, look, we may not bat 100% all the time, but over 22 years of putting this company together, I'm very proud of our team, and proud of our history in putting good projects together and acquiring good projects. And we're now one of the largest. Well, we have been one of the largest silver producers in North America, and we continue maintaining that position. Q2 numbers, we didn't put the financials out yet, so the financials will come out in mid-August, but the production numbers did come out. And I can't talk about our treasury too much, but we're making cash, and treasury is building. We left Q1 with over $450 million in the bank, so our balance sheet's the strongest it's ever been in the company's history. So I've said on other interviews, as a CEO, you're always in the mining sector. It's such a cash-intensive business, and having not to have to go to the markets for money to buy another asset or invest money in an expansion project or something like that, it's really nice to be in that position. Mm-hmm. And as I said, the balance sheet's great, and production continues to rise. We expect to have the last half of 2025 even continually show improvements compared to Q2. We did redo our guidance, which the stock was up yesterday about, I think, 6 or 7% as a result of us upgrading our guidance. So, we had guided around 29 to 30 million ounces back in January. Now we're guiding between 30 and 32 million ounces, in which I said, 55% of that silver.
Keith Neumeyer reflects on how NVIDIA's $120 billion gain in a single day dwarfs the entire silver industry's value, highlighting how overlooked the silver sector remains. He compares today's tech-driven market to the dot-com bubble of 2000, when the Nasdaq crashed 80%, sparking a significant bull run in metals. That era saw silver surge from $5 to $50 and gold from $250 to $1,800, benefiting mining stocks like First Majestic. He sees a similar setup today: overheated tech and undervalued metals. First Majestic, focused entirely on silver in Mexico, has substantial assets, rising cash flow, and a long mine life. With only a few pure silver producers left, he believes it's an excellent time for contrarian investors to look at silver, and says his company is the purest play in the U.S. market. Keith Neumeyer advises investors to do thorough research before entering the mining sector, noting it's a complex, high-risk, and capital-intensive industry. While he favors established producers, he also allocates a small portion to exploration companies for their high reward potential. He emphasizes that significant funds, which left the sector a decade ago, are now revisiting it, signaling a potential influx of institutional money. Despite silver prices being above $36, his company's stock still trades far below its past highs, suggesting a disconnect and room for upside. Neumeyer remains confident, recently buying more shares himself and reaffirming his strong commitment to silver. Now, let's have a look back at the interview.
The share price move, NVIDIA, $120 billion move in one day. That's bigger. That's probably 3 times the size of the entire silver industry. It is pretty crazy. I look at the current market. It's very similar to what it looked like back in 2000. And, I'd just retired from my copper company that I put together in the prior decade. And I was kind of looking around and I was trading the high-tech market a little bit.
So this is what a retiree looks like after 25 years.
Well, I've been in this business for 40 years, so it's been a while. So I turned 65 this year. So anyways, I remember the Nasdaq hitting 5,000.
Yes, it did.
In March of 2000, right? And I owned a couple of high-tech stocks at the time, which I unfortunately lost money on, but I made money on the run, so I did okay, in the whole scheme of things. But when I saw the market collapse, the Nasdaq went down 80%, from 2000 to 2003. And that's what really lit up the resource market, because all this money had to go somewhere. So it went into real estate, it went into mining, metals, and we saw silver go from $5 to $50. We saw gold go from $250 to $1,800. Copper, of course, exploded. All the metals and all the stocks, like First Majestic, went to $25 a share. By 2011, we were producing 10 million ounces of silver that year, and we were, everything was great. But no one predicted that, the silver price is going to go from 50 to 12, over the next 3 years, which it did, unfortunately. Our stock was, killed like the entire mining sector was as well. And now what I'm seeing is the repeat of the same all over again. And of course, First Majestic has its unique characters and characteristics. We are the purest silver company in the world. We're all in Mexico, which is a pretty good jurisdiction as far as we're concerned. We've got 3 solid long life assets that'll be producing for the next decades into the future. Long mine life. So we're and the cash flows there. The treasury's increasing. It's just a great time to be, I think, in the mining sector as a whole. But if you're looking at silver, there's only 3 or 4 silver companies out there, and of the group of silver companies listed in the United States, we're the purest of the group. Yeah, well, the industry is another thing altogether, and I'm on Twitter, Keith_Neumeyer. Go to First Majestic website. We got a 1-800 toll-free number there. Info at firstmajestic.com if people want to send us emails for specific questions on any topic. But industry-wise, I would just suggest people do their research. The mining sector is very risky. It's very, it's a very complicated business. You're dealing with Mother Nature, and you're dealing with a very cash-intensive industry. And for me, I like to focus on the producers, but I do have some money in the explorers as well, because it's always kind of fun to get that potential leverage, owning a small little explorer that might get an interesting drill hole. So I always have a little bit of money there. But for those less inclined to take that type of risk, because it is a risky part of the sector, go after the producers. And we're right in there mid-tier, and I can tell people that are listening here today that the big funds out there, the big pension funds, the big mutual funds that used to be invested in this market a decade ago, are now all of a sudden starting to relook at this industry. So they're not. I think that there's a whole ton of money that's going to be coming into the mining sector, and I think that's when you start to see the big moves. Stock has done okay year to date, but I think last time silver was at north of $30, our stock is $25. Right? And today the stock is $8 or $9, and we're at $36 silver. So there is a bit of a disconnect, and there's a lot of catch up and potential, gains for people that want to jump in. I can't give financial advice, of course, but I personally bought some stock myself just a couple of weeks ago, and I'm all in when it comes to the company and silver.
Keith Neumeyer's views make a convincing case that silver is undervalued in today's market. The widening difference between paper and real silver, along with opaque global supply chains and rising investor interest, suggests possible price volatility and opportunity. With First Majestic boosting its output and percentage of real silver in circulation, Neumeyer feels the company is well positioned for the next stage of the silver bull market. His investment and optimism reflect a deep belief in both his company and the long-term fundamentals of silver. How will increased physical silver flows through First Majestic's mint affect the worldwide paper silver market over the next few years? Could increased institutional interest in mining indicate a broader shift in investment away from overpriced technology stocks? Please provide feedback in the comments section below. If you found this video helpful, give it a thumbs up and subscribe to stay up to speed on our latest content.